The broadcast is now starting. All attendees are in listen-only mode.
A very good afternoon to everyone. Welcome to today's webinar on materiality and risk assessment in an SMSF audit. I can see a lot of people are still joining in, so I would request the audience to give us a minute so that we can wait and have everyone join in this insightful webinar. Thank you. All right, I think we've got majority of the people in. Let's begin this webinar. But before that, can someone from the audience please confirm that I am audible? You can do so by simply typing yes in the questions box on your panel. Thank you very much. That was quick. Appreciate it. If any case during the webinar, this call gets disconnected, you can dial the number shown on your screen, put in the access code and the audio pin from your mobile device and rejoin the webinar. The handouts for this particular webinar are already in your panel and can be downloaded. Any questions regarding the webinar can be put in the questions section, and time permitting, we will be addressing them at the end of the webinar. Now let me introduce our speaker to you today. Manoj Abichandani has worked in the SMSF space since 1988 and has seen changes from the earlier days to a $1 trillion retirement pool. Initially, he worked as an accountant for 7 years for 2 CA firms in Sydney in the SMSF division, and then his own CPA firm for 19 years as an advisor to 600 SMSFs on strategic issues. He has written and regularly updates online smsfaudit.com.au, an online audit tool which is used by over 600 auditors to audit more than 80,000 funds a year. He is responsible for all SMSF products at www.trustee.com.au, whose SMSF deeds are used by more than 10% of all SMSFs. Welcome, Manoj. The stage is all yours.
Yes, thank you, Vaibhav. And today I'm going to talk about the Superfund auditor's responsibility on auditing a fund, detecting fraud in the financial statements, or the control checking, the control procedures which the trustees have implemented. I'm going to talk about, sorry, I'm not a bit down under the weather, but we'll carry on and see how we go. I'm going to talk about materiality, which is quite elaborately stated in the auditing standards, and the risk assessment of the auditor's check for the fund's financial statements, and mostly talking about a misstatement in a financial statement or omission of an important item, a transaction in the financial statements, and how auditors have to highlight those facts in their audit, and how the auditing standard 240, 315, 320, and 330, along with the ASA 300, which I have not listed here, but I'll be talking about it in my presentation on how it affects their work. Now, just to give you an overview of what we are going to talk about. It's all about material misstatements, reasonably, uh, uh, which is expected to influence the decision makers who are the trustees of the fund, and how the auditor is responsible to apply the concept and while they are planning and performing their audit. And as far as this assessment is completed, it should be done before the actual audit work commences, and they need to establish what would be the quantitative inherited risk in each and every item which is in the financial statements, and they need to check the internal control procedures and also the risk of non-detection of any risk, because it's quite possible that certain misstatements or omission of certain statements can go unnoticed by the auditor, and at what levels they would make the financial statements not usable by the economic decision makers, which are the trustees of the fund. Now, it is not only the one statement. We have to also look at, because an item could be, a small item could be immaterial in its own right, but we have to look at the cumulative uh, influence of certain misstatements, which can totally override the material levels, the benchmarks which the auditors have established in the fund. Now, just to introduce you with the topic, the significance is very important of the misstatement and how it will affect the financial report, because we are mostly accountants in our previous lives, and now we are auditors. We have a good understanding of how the financial statements are prepared, and we are fully aware on how an incorrect statements, or if it is a statement which is omitted. And I can give you an example. Let's say that a share was sold at a certain price, how it can affect the profit of the fund, and how it will change the tax payable by the fund to the tax office. So what is material will always depend on each and every person, each and every auditor. The benchmark which each auditor determines could be based on their professional judgment and the history of the fund as well. Like if they have audited the fund before and they did not find anything, so perhaps they can look at dividends received which are, say, $1,000 and above, and they can ignore in their assessment of dividends which are below $1,000 uh, for that fund. So the professional judgment can be reached at various factors. They will consider many, many things before they decide that materiality of that item. Now, it's also the quantitative factors which are also important, because when we are auditing a fund, we are not only looking at the financials of the fund, but we are also looking at the compliance of the fund and whether there could be any potential damage to members, if they breach any of the SIS Act provisions, like if there is a loan to a member, although the interest being received is correct, but the loan to a member under Section 65 would again be a breach. And that could affect quite a bit because that could actually disqualify the member to become a trustee of the fund. So any disclosure of breach can influence other trustees as well, because there are other members in the fund who could be trustees as well, whereas there could be one trustee managing the fund, but the others are trusting one trustee for all investment and administrative duties, and those members could be affected as well. And the ATO's perception, on how the fund is being run by the trustee could also be can be impacted if a breach is lodged in a contravention report by the auditor to the tax office. Now, there could be increased tax, and there could be penalties as well. So the auditor needs to look at the size of that breach, and look at the circumstances which that fund is in, and when that breach is actually happening in that fund. Now, overall materiality is quite important, because you have to not only detect the material misstatement, and like I said, it could be a cumulative result of many misstatements. So, we could say that selling of a share, if there is an understatement of revenue, say by 2%, I'm not going to worry much about it. But if there are 5 or 6 transactions, and if all of them are below 2%, but the cumulative effect could be such that it is above your benchmark. So we not only have to look at the misstatement for each and every transactions, but we have to also look at the overall materiality of each and every transactions happening in the fund. Now, it's very easy to decide which thresholds you will use to benchmark. You can or look at the asset value. So let's say if the fund has got only shares and it's worth $1 million, there could be some assets which are of high value and some assets which could be of lower value. So you can start benchmarking them on their investment performance, or you can look at each and every value, their growth over the years, and compare 2 years and see which transactions you need to look at, because there is no requirement for you to audit each and every transaction, and you have to use test basis, and you have to pick up certain transactions in the fund and see it all the way through from its origin till the exact sale of that transactions. Now, it doesn't matter what base you use, as long as it is effective and it is your audit process and your procedures are able to evaluate and find and detect those threats, detect those misstatements. That is the key to a good audit program. Now, the overall materiality means that you could even have an amount where you set a dollar figure for each and every item, or you can take a percentage of the total assets, say 5% of the value, or you can say if a certain member balance, if there is a misstatement of a certain percentage of a member balance, then overall it will affect the fraud or the misstatement for each and every member to a certain percentage. So it all depends on your judgment, it depends on your experience, and your auditing, the number of funds which you audit, and if you have audited the fund before, it will depend on that as well. And if you're being referred by that fund by a certain administrator, then you know the quality of their work, and that will also determine the material levels you will be benchmarking against. Now, this high degree of judgment and estimation means that you can also go into deep into different classes of shares. So if collectibles come from a certain administrator and you know that in the past there have been weaknesses in the control procedures and in managing those type of assets, then you could make your benchmark a little bit low and make sure that you check each and every transactions a little bit more deep. Personal use assets are other type of assets where administrators don't see them on day-to-day basis, and then it could be commercial property, or if you see in a fund if there's a lot of activity in a certain in a certain class of assets, then you can decide to set up your benchmarks accordingly. Now, you need to check the income of the fund, you need to check the expenses, and you need to check the liability of the fund. And that would mean the member balances as well, which the fund trustees owe to each and every member. Now, let's look at the performance of that materiality and how it will change the way you work, because the lower the materiality, you will be, reduce the probability of an undetected misstatement. So, but that does not mean that you have to check 100% of all the transactions. But the lower level of performance materiality will always increase the audit evidence testing. So you would like to check each and everything, and that could be quite labor intensive work, like checking each and every transaction with the dividend statement, for example, checking each and every figure whether you received it or not. But if there are smaller number of transactions, so you don't have to use the same benchmark for every fund, and you don't have to use the same benchmark for every fund in the different years, because from one year to another year, the number of transactions can either reduce or increase. So depending on how you set your performance materiality, each year it will reflect how the environment is, and that is what auditing standard 3115 talks about, that any benchmarks which are set should be always looking at the totality of the fund situation, then just keeping one method for each and every fund which you audit, or from one year to another year. Now, to calculate this performance materiality, we talked about professional judgment, and that could be the history of the audit work for this particular client. It could be the nature of the errors in the previous audit work for this client. So, maybe this administrator sends you 100 funds, and uh, he's got a special dedicated person who looks after all his self-managed super fund. So it's possible that the number of errors would be low, and whatever funds you have audited, you have not found anything. So you could be little bit more lenient, and then increase the benchmark in the following years. But then, like we said, that it also depends not only on the type of assets which the fund has, but it's also the type of transactions the fund can have. Like it's possible that there could be more undetected errors, say in an LRBA or cryptocurrency, or in capital gain tax calculation. So when you when you set your percentages for materiality level for each one of these types, they could be probably a little bit lower for all of these high risk transactions in the fund. Now, there could be a lot of small balances in the fund, and for that is that, it has very little importance. So small will also depend on the size of the fund. So if you are looking at a $10 million fund, if the valuation is wrong by $1,000 of a certain assets, then it doesn't make much of a difference to the member balance, or if there is no tax liability, although Division 296 should also, if it becomes low, should also be considered, because that would mean that there could be some tax on unrealized gains. But you have to look at the overall percentage and the account balance. So anything small can literally be ignored. Now, let's look at the auditing standard 300 and the materiality and the procedure and the tasks which you must, as an auditor, uh, be concerned about. Now, there could be fraud in the fund, and sometimes, the bank statements are not provided, and there could be risk factors in looking at the the accounting records. So you have to make sure that you collect all the documents correctly, and if you do not have everything provided by the administrator or by the trustee, you have legislation support to keep on asking for further documentation. But you have to consider that there could be a risk in the misstatement, because you haven't been provided a particular document which is quite crucial for your audit evidence check. Now, you must look at all the transactions in the bank account and in the journals, and look at the large amounts first, because that will help you, by ledger scrutiny. You can mark them and, seek explanations for those transactions specifically, besides looking at only, the total fund transactions. Now, you must also check that all transactions are at arm's length basis, and we are quite aware of NALI and NALI, non-arm's length expenses. Make sure that these incomes and expenses are recorded in such a manner that the tax effect of those transactions are reflected correctly in the tax calculations. Now, there could be significant events, and during the year, like divorce or someone dying, all of those transactions will lead you towards a separate, path altogether, and you can check those specifically, like if there is a divorce matter in the year, then you have to see whether the allocation of income till that date, which the court has provided, has been correctly calculated or not. There could be some solvency issues, and I've seen some funds trading in options, so and CFDs, so that could really make the fund quite risky to future dealings. So you have to be really watchful if you encounter those kind of transactions. Now, sometimes we have funds which have an actuarial percentage, because some members could be on pension phase and some could be in accumulation phase. And it's not only looking at that certificate, but also you to be checking whether that certificate has been correctly inputted, because most of these actuaries have a disclaimer and it's a machine which is issuing those certificates. So you need to check whether the input was done correctly so that the percentage which you have got on the certificate truly reflects the transactions in the fund. Now, there could be some subsequent events, that is after the balance sheet date, and that could be, for example, if you look at the banking shares on 30th of June, and today they are almost 10 to 15% higher. So that could also, I mean, they could go even 10 or 15% lower. So if the fund is holding certain assets, and at the date of your audit, if there is a huge variation, you have to request the administrator to add a note to the financial statements to reflect the true situation of the financial statements which you are signing off. Now, you must also look at the legal status of the fund, whether it is registered or not. You have to look at the super fund lookup, and then you must get a declaration from trustees on their trustee representation letter, whether the fund is an Australian resident fund or not, and whether the control and the management of the fund is within Australia or not. Now, many a times directors could be disqualified, and we recently uploaded our June figures. You know, we get quarterly from the registrar, and there you can check whether the trustees are legally capable to discharge their obligations. So you must check, the register of disqualified trustees and ensure that the declaration which the trustee provided holds good. So that would also mean that annually you should seek the trustee representation letter, and not just when you first started auditing the fund. So I'm in the favor of getting an annual trustee representation letter, and make sure that the dates are relevant, that at the time of your audit, at the time of 30th of June or whichever period you're auditing, the trustees were not legally, incapacitated to act as trustees of the fund. Now, we talked about auditing standard 315, and we must also look at the trustee to ensure whether the documentation is proper, every decision is being made collectively, and there are minutes available for each and every major decision in the fund. And it's possible that the trust deed may allow some members to have more votes, because it's possible that you can have voting power according to member balances instead of equal votes. So you need to dig into the trust deed to find that out. And you have to ensure that the procedures are in place to ensure that all the rules of the fund are being followed by the fund. Now, to do that, you must have a good understanding of the trust deed before you commence the audit. And most good auditors, what they do is they look at the deed, and if they have already audited the fund before, they would have some notes prepared which are to be rolled over into the next year, to ensure that they are aware of certain provisions in the trust deed, certain rules in the trust deed, and ensure that the fund is complying to those special rules. You should look at auditing standard 520, which is basically a procedure, on how you will review the fund before you finish off the audit, check the opening balances, review the financial statements, the member balancing, and assess whether they are consistent from previous years. And you'll compare income and just as a glance look at the rental rate of return or look at the dividend total rate of return. If it is within the benchmark and everything looks okay, then you can again change your materiality level. And when you look at the fund, you always have previous years, so you could always see how the fund has performed over 2 years to see, how or what things you need to look at, how it performed in last year, whether you audited or not. Maybe there's another auditor which was used, and whether there are any comments made in the footnotes of those financial statements on how some of the accounting policies the fund has used for that financial year. Now, as far as investments are concerned, I'm going to talk in the future a bit about whether all the assets exist. So I'm going to talk about title searches, if they are property, and I'll show you HIN numbers, how you need to check whether the shares actually exist. You must verify from the share registry that the fund actually owned those shares. And you should also make sure that they are recorded correctly in the fund financial statements. And sometimes there are shares which are held in custody, like CFDs, or there could be some custodians which could be appointed by the trustees of the fund. So you have to ensure that you have ensured those are correctly executed or not. And if there are any assets, there are no loans against them, because since regulation 13.13 talks about having no liability, no lien over the assets of the super fund, and section 67A and B talks about certain situations where there can be a loan on an asset provided they are held under a bare trust, where the security trustee is owning the assets for the benefit of the trustees of the super fund. Now, each and every investment should be included at market value in the financial report, and then market valuation is going to be a major topic very soon if Division 296 passes through, that is the 3 million one, because there could be quite a few arguments in the future between the auditor and the trustees or the administrator of the fund. Now, the areas of dispute could be in commercial property, because residential and are quite easy to judge, because there is a lot of activity, whereas commercial properties are a little bit unique, and they are sometimes specifically made for certain uses, let's say a petrol pump. So there could be different methods and yardsticks to value them, or there could be, say, a car wash or a mechanic's workshop which the trustee is renting from the super fund. So there could be different methods on how you could value an asset, and these disputes are going to be more relevant where any one member's balance is close to $3 million going in the future. Now, I'm also aware, I think it's Howard, the new shadow minister, finance minister, and they have said that if we are elected, if the coalition is elected, they will probably not, they'll probably not go forward with Division 296. So, we are at a stage where, we don't know what's going to happen in the future. Now, liabilities, we've talked about assets. As far as the liability of the fund is concerned, usually it's the member balances, or if there could be some small tax amounts which are outstanding at the end of the year, or there could be some income received in advance. We have to, as auditors, make sure that they are not under or overstated, and whether income is allocated correctly to each and every member. And I'm going to show you on online SMSF audit that we have built such a tool. Although it is not the responsibility of the auditor to ensure that taxable and tax-free components are correctly shown in the member statement, but if there is a new fund and if there is a rollover, I guess an auditor should go deep into those kind of components in the member balance and ensure that they have been correctly marked, because this could be of consequence if a member dies, and then those monies are to be paid out to dependents. Now, as far as revenue is concerned, make sure that they're recognized correctly, they are accounted properly according to the accounting policies, and they are of the true and fair value. And at times, I looked at, one fund from an accountant who did not do this much, did not do SMSF accounting much. And what he had done is, if any share had unrealized loss, if it had gone down, he was trying to take it off as a trader and not and reducing it from the capital gain, and he said that the status of the super fund is of a trader because of the number of the transactions, and the closing values of unrealized gain have to be taken off from the realized gain, but that was not true. So just to make sure that they are of fair value, all the capital gains have been recognized, and we all know that they get 1/3 discount. I've seen some accountants and trustees considering it as 50% discount like individuals. So, all of those things need to be at a certain material level. Now, I have just put some material level, or I've said that random 50%, but then this is my method, this is my professional judgment, and I'm just left it there, but it all depends on your professional judgment and the history of the fund, so that you can make your own decision for each and every fund, and looking at the nature of the transactions of each and every fund. As far as expenses are concerned, we need to make sure there are no personal expenses which the super fund trustee is paying, whether the tax is correct or not, and if there are any concessional, non-concessional contributions, whether there are any expenses which were paid by the member personally, which are being treated as reimbursements or being recorded as concessional or non-concessional transactions. We need to go a little bit deep. As far as contributions and transfer in go, we need to check allocated to the members correctly or not. And if it was me, I will check all of them. If there was one, then I will check it. And if there is any tax on contributions, especially concessional contributions, I would always have a separate tax calculator, and I will show you how that works as well in online SMSF audit as well. And I will also check, I will have my own records, whether there are any carry forward or bring forward contributions and whether they have exceeded the cap. And if there are any transfers in or out, and that is possible if from an accumulation account you are commencing a pension, or from a pension if you are commuting to an accumulation account. So I will check all of those transactions, whether the allocation has been done correctly. Sometimes contributions go beyond the cap amount. I will check them as well, whether they are correctly being recorded. And sometimes trustees have in-specie contributions, and the only thing which are exempted is listed shares under Section 66 of Swiss Act. Otherwise, trustees should not buy anything, the other being the business real property. Otherwise, the trustees should not be dealing with the members of the fund or with related parties of the fund for contributions at least. Now, that's about it. But just to show you, for those of you who are using the auditing software, if you go to tab A, you will see that the auditing process. And if you have been watching my previous presentation on scope of audit, pre-audit engagements, we've covered most of them. And this is the last of the series. So I've ticked risk analysis, and you will see that you have to document that you have considered the material misstatement in the fund, and what is the nature, what is the audit procedure which you're going to follow, what are the inherent risks, what are the control risks, and what are the detection risks which we just talked about. Now, as far as the evaluation of risk is concerned and how you will schedule each and every item, we went through misstatement of liabilities, and these are the comments which in the software you can easily change for each and every fund. And we have given a brief description of what it means, but we are going to expand this a little bit further as well. Misstatement of expenses, misstatement of assets, and misstatement of contribution, all of that what we discussed. And this is how you conclude and show to the tax office, who will come and review your working papers file, or your professional body reviewers who will come and have a look at your file. So what you're supposed to do is, after you make any changes, you save the risk which you have identified, and then you look at the materials misstatements on what they could be, and then you need to make a decision on cash balances or on listed shares. You need to enter the figure, and we've given a default figure, but you are free to change them on liability, on revenue, and member balances on what would be your materiality on each and every of those items. Now, as far as we talked about how we're going to work out the tax, the system actually work out the tax. You don't have to do it specifically in any spreadsheet or anything like that. As far as the allocation of income is concerned, we created that table, and that is based on member balances, on the member statement, on how what the opening balances were, whether you were on pension or were you in accumulation, whether the software or whether the financial statement which has been provided to you has used the daily balance method, or whether there is an error, whether there's a estimated method. And this is how we work it out. And what you need to do is check whether BGL or class is doing it correctly or not. You can do a pension reconciliation also. That means that uh, just to make sure that the taxable and tax-free components have been withdrawn correctly or not, whether there are any concessional contributions made in the accumulation account, whether that is showing correctly in the taxable component or not. Those of you who don't use it, and you've got my um, handout, and please try to incorporate that. And we have built it from one of the auditors who was audited, and on the recommendation of a reviewer of a professional body. So we keep on updating it. Here you can check the transfer balance for the member. So it depends on when the pension commenced and when it increased from 1.6 million to 1.9 million, on what is the gap and how much more can be contributed to pension fund. So as far as dividends are concerned, we have uploaded the dividends for 30th June 2024. This is for 2020, so it won't have it. But when you add any share, it will have, all you need to do is you need to enter the security type and name, and it will show you uh, the dividend which was declared by that listed entity. We look at only the Australian shares. Now, you must verify from the share registry whether the asset is held in the name of the fund. To do that, all you need to do is you need to click verify. You need to put the HIN number of the trustee, and then you will see whether the asset is held by the fund or not. Now, I think that's about it. Vaibhav? I'm finishing early, which is good for a change.
Thank you, Manoj. Thank you for your time and the presentation. Are we able to take some questions? Because there are a few that have come on the some
Yeah,
of the
I'm happy to
slides.
do that.
Yeah.
Yeah,
Okay. Awesome.
yeah.
So the first question would be employer contributions. The online software asks if employer notices received. In all my audits, the employer contributions come from business owned by the fund members. How seriously should I
Yeah.
take to get such information when none is readily available?
Yeah, that's a good one. I'm just going to go into the documents area, and no, it's not here. I'm just going into the templates area. I think we have a declaration. Here we go. We have a declaration on a contribution, so you don't have to spend a lot of time on it. I'm just going to contributions here. So if you go there, contribution reserves and minutes, here you are. So all you need to do is just download this, and you just need to enter the amount, and then it's done and dusted, so it won't take much time for you to create one. Many times, your audit file will not be complete. You will, or this, it'll pre-fill most of the things, for you. So it depends on how seriously you think, but from the tax office point of view, it is, if there's a personal contribution made, it cannot be deductible, or an employer contribution made, it cannot be deductible unless and until we have a notice of deductibility lodged and the trustee has accepted that as to be a concessional contribution. So again, professional judgment, but I would say that if it's not there, you prepare it, because at the end of the day, and I know most of the auditors think that's not my job, but then you can train the administrator that this is a required document. You need to have it. So quite seriously, it's an issue. Yeah, it's an issue.
Okay, thank you.
Yeah.
The next question is, how do you value units in an unlisted trust?
Oh, okay. Yeah, that's a very good one, because a lot of trustees end up buying syndicated properties. And what I mean by that is two or three friends get together, or they invest in an unlisted unit trust. And every year, the unit trust will distribute some income, or may not even distribute any income, but they may give you some indication of the fund being, owning that asset, and an estimate of that value. But if they don't, then it's a bit of a problem. But I suggest, if you look at my next presentation, because your first problem is to judge whether that trust is a related trust or not. Valuation is coming next, because if it is a related trust, and if it is borrowed, there could be some fatal consequences. Trustee declarations could be very important. To check with the trustee, because they would know how the investments are going. The auditor can also ask for third-party verification. They can write, call, email to the trustees of the unrelated trusts and find valuations. Perhaps that's another way. I think it was Cam and Bear case. If you remember, it was a Queensland case where this lady had invested in unrelated trusts, and they were property development trusts, and those investments had actually gone very bad, and the financial statement had a very high value, whereas those investments were duds. So in that case, I remember the auditor was found to be negligent. And even if you have one iota of doubt, I would suggest that you qualify Part A of the audit report, because if you do not have any third party or any evidence to support the valuation which is in the financial statements, then obviously it is incorrect. You must put it in your management letter also that you have qualified Part A of the audit report. As far as contravention is concerned, then again, it all depends on the materiality level. The financial statements may not tally with the unrelated trust valuation, or the investment may be shown at a different value. And if it is material, then obviously, there is a breach which must be reported. So this is something which I think of, some of the ideas which you should think of.
Okay, thank you. The next question would be, if a non-secure private loan in SMSF only charged 4% interest for FY 2023, is it considered as arm's length rate?
No, look, unsecured loans, banks give you 80% only if you have invested 20%, right? And then they give it to you at 6-7% or whatever that rate is, right? as far as unsecured is concerned, they're like credit cards, you know, they have lent you money and they look at your history and things like that. And I'm not sure, I don't use credit card for borrowing, but I think, are they close to 15, 16% or thereabouts? I'm not sure. So you're
Mostly
comparing
19%,
4%,
much 19.5.
19,
Yeah.
19, yeah, yeah. So you should be comparing 4% with 19%. And there is another new thing which is I can see coming and I've seen a lot of articles and some of the ATO commissioner talking about duty of care of a trustee. So if the investment is not to the benefit of the beneficiaries, namely the members, the trustees could be asked to resign, or they could be even be removed by the tax office. And any such investments, if go unreported, the auditor can get into trouble. But if you see something like that, that's a big contravention. And that just tells you that it is a loan to a related party. You know, you wouldn't charge high risk at 4%. You know, you'll probably, even mezzanine funding nowadays, you know, the amount you give to builders is 11 or 12%. You know, so using super fund money for 4% is bad and must be reported. That's what I
Okay.
think.
Okay. Thank you.
Yeah.
Uh, the next question is: are trustees to do market valuation every year as advised by ATO now?
Oh yes,
Every year,
every year.
yes.
Every year. And I just want to also show to our listeners here that I'm just going to go back into that test fund. Here you are. That's a test fund that we now have market valuation embedded in our software. This is now we're talking about residential property. I think it's $20, so you can apply for it. I think where is it gone? Yeah, for the residential property, is it $22,
Flat
Weber, or
$22
something like?
across all states.
Yeah, $20 for residential property. Yeah,
Yes.
and for commercial property,
It's 600 up to a million. Just click on the down arrow. You can see all the prices.
yeah, here,
Yeah.
yeah. So yeah, so if it's a commercial property, and the sad part is, if it is to be done every year, the problem is it'll cost you, you know. So if it's commercial property, you know, it's up to 1 million, it's $600 every year, and that's the cost. And if it's not done, then obviously it's stated at the wrong price, you know. And also we talked about whether the assets exist, and title search is a very important component. And I think we offer price guarantee here. That yeah, hey,
It
yeah,
is the lowest
here
in the
it is.
market.
That yeah, yeah, yeah. So this is the lowest anywhere anybody can find, you know. So uh, if there is a mortgage, then there is a SIS regulation 13.13 breach, which must be reported. It's in the audit report. So, you know, this is an important part of everyone's audit. Yeah. Any other questions?
No, Manoj, no more questions.
Okay.
But
Thank you.
can I just point out one more thing? These property
Yeah, sure.
valuations for accountants, they can also, if they are using trust deed, then they can get it
Oh, yeah.
for free
Oh,
through the
this for free,
vouchers.
is it?
Yeah, so through
Oh,
vouchers,
yeah,
you
yeah, yeah.
get credit
Okay, yeah.
and they can actually access it for
So,
free. So they can charge the client, the accountants,
the valuation. It's
Yes.
$55.
No. So if you go to the
Yeah,
voucher
yeah.
page, our fees,
I go to the voucher page,
voucher
yeah,
packages.
and voucher
Yeah. So if you just
packages.
scroll
Yeah,
down,
yeah,
so there you go.
yeah,
So with 25 vouchers, you get one
yeah.
property valuation.
All
50,
right, okay,
50
yeah.
vouchers, you get 7 property valuations.
Oh, good.
Yeah.
Yeah.
So you get
So they
credit.
don't have to pay.
They
Yeah.
don't have to pay. Yeah. So if you're using trust deed and you're buying documents, this is just a value add that
Uh-huh.
they get.
So if they buy 100 vouchers,
Vouchers.
it's $81 excluding GST. So it's $90 per document. And per document means that they can form a company for
Yes.
one voucher. Is that right? Yeah.
Yes.
Or they can get a super fund trust deed. So they'll pay $90 instead of paying how much is there for a
128 per
super fund?
company.
New super fund.
165 is one, yeah, and 128 is company plus ASIC fees.
Okay. So they don't pay that, but they pay in advance.
They pay in advance. Yes,
But
they just buy the
but
vouchers
do
in
these
advance.
vouchers ever expire
No,
or?
no, they don't expire.
Oh, okay. So, all right. Okay, that's a good thing. Yeah. All right. So, thank you very much.
All
We'll
right.
talk again. And I just want to talk about related trust. That event is on the 8th of August. And Garth is up on the 6th, and he's talking about business real property, the hidden issues, and that'll be interesting as well. And property is going to be quite a bit talked about, as Mark also on the 12th is talking about property. Okay, thanks very much.
Thank you, Manoj, for your time. And also thank you to the audience for attending today's webinar. We hope to see you in the next one. I'm going to now end the
Bye.
webinar for everyone. Have a great week ahead. Bye-bye.